Well, after our results we have published, the sun is shining in Vienna, and it's also shining for the fourth quarter because we're expecting that we will see another increase of our production, especially in the fourth quarter. All the acquisitions we have done in the first quarter will pay off and will move into our P&L in the fourth quarter. We think that the oil price will stay in the level we see right now. I share your view that the concerns about demand are now outbalancing the supply reductions we see, for example, in Iran. So therefore, I think we will see an oil price which will be something in the mid-70s to the low 80s in the fourth quarter.
I don't know how that happened so quickly, and you and I were at the Hofburg in Vienna for that huge OPEC multi-day conference earlier in June. And then it was all about sanctions. It was all about this looming date we've got in early November where the Iranian oil supposedly, and I say supposedly because you know what I'm saying there, comes off the table as well. How have we switched to worries about demand from worries about supply?
Well, Steve, I think that the supply reductions of Iran is already priced into the oil price. So I think this is already covered by the trading markets. But where is the potential to outbalance some further reductions from other regions? Well, we do have huge geopolitical risk, especially in North Africa and also in the Middle East region. So there, I think, is a little bit a concern whether or not we are going to see stable production in these regions. And the main question mark is, of course, the trade conflict between the U.S. and China, whether or not we're going to see really such a sharp additional increase of oil demand in the next year. I don't buy that we are going to see 1 million barrels per day additional demand in oil next year. I really have my concerns. I think we will have a slowdown of GDP growth and a little bit of slowdown on oil demand growth.
Right, now let's be more specific about your North Africa story. Iran. You had some activity in Iran. You have pulled out of Iran. Two questions. One is there any significant cost impact from that, and when will it be booked? And two, could you talk more broadly about how you view the prospect of sanctions on Iran at this point and your ability to re-engage with that country?
Well, first of all, no cost effects. Your question number one. There's question number two. I think everybody is now frustrated, and I'm a member of that club, because we have now closed our shop in Iran, and now we have to wait and see whether or not the situations towards Iran is going to change. I don't see that anywhere at the horizon. So I think re-entering Iran will take a pretty long time.
Can I ask you about doing business in Romania? Because there have been some concerns as the government has been seeking energy independence, trying to make sure some oil is traded on local contracts, this all around exploration rights in the Black Sea. I know that you've postponed an investment decision on an exploration project as a result in the Black Sea. So what do you make of what the government is pushing for, whether it is right or wrong, and what the impact is on your business?
Well, the government has an interest that we are going to invest into the deep water, the Neptune deep gas field in the Romanian water in the Black Sea. So I think both the government wants to create a framework which is sufficient for the investors. We have to wait for this. It takes too long. So now we are waiting, and we are reading the draft of the offshore law. On the first look, I can say, yes, there are some elements which we can accept for such an investment, but we really have to see what is really put in after the presidential vote on paper and what is the framework. From my point of view, it will have no short-term impact on our balance sheet. It is more a topic of OMV Petrom in Romania. It is a long-term investment, and it will be the gas component in our portfolio in Romania. From my point of view, this is gas which we need, especially for Romania, but even more for the European markets to diversify our supplies. Therefore, there's a huge interest from the Romanian government, from the investors, and from the EU Commission that we are going to invest into additional production of natural gas from offshore in Romania.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.